All right. Hi, everyone. We might have a few more students joining us in the next few minutes, but we will get started just to respect everyone's time. My name is Becky. I work in the Center for Career Development, specifically with students who are interested in business consulting and finance. And I'm so excited to be here tonight with 5 wonderful alumni who work in the world of real estate. This event is co-sponsored by the Real Estate Club, which many of our students are in, and Julie will actually be co-facilitating the panel with me, so I'll let her introduce herself as well.
Thank you, Becky. Good evening, everyone, and thank you to each and every one of you for making the effort to be here today. Just as a quick introduction, like Becky said, my name is Julie Nigro, and I'm a current senior at Holy Cross and am one of the co-presidents of the Real Estate Club. Before we get started, I would just like to express my appreciation to both the students and alumni that are attending this panel. I'd like to make note that us students at Holy Cross are really lucky to have alumni like all of you that make this extra time to be such a great resource for us.
Awesome. Thanks so much, Julie. So we will get started with some quick introductions from our alumni, and then we will dive into questions. So for the alumni, can you please introduce yourself with your name, your class year, the company, and your role? And then also something that you were involved with at Holy Cross. So that's your name, class year, your role in your company, and then something that you were involved with when you were at Holy Cross. We will start with Grace.
Hi, everyone. So my name is Grace Ingram. I am an associate on the CBRE Boston downtown office leasing team. I graduated in 2021, and something I was involved with at Holy Cross was the Women in Business Committee.
Awesome. Thank you. Matt, we can pop it over to you.
Sure. My name is Matt Webb. I graduated in 2011. I work at Wells Fargo. I'm a vice president in our real estate banking group. And at Holy Cross, I actually studied Chinese all 4 years and did my semester abroad in Beijing.
Very cool. That must have been quite the experience. Next, we'll move over to Tim.
Hi, everybody. Tim Johnson, class of 2002. So I think I'm the old person on the call. I'm not sure how many programs are available. There's many more now available for you in terms of getting involved in the real estate business and other businesses overall. So things that I was involved in at Holy Cross, I was a math major and part of the Leadership Council of New York, which I think still exists today. I work at Blackstone. I'm a senior managing director, and I oversee our global real estate debt business.
Wonderful. Thanks so much. Popping over to Rob.
Hey everyone, my name is Rob Rossi, graduated in 2016, economics major, currently work at Takana Capital Advisors, which is a multi-strat hedge fund based in New York City, part of the real estate group there, about 9 investment professionals. We're involved in everything from senior debt to LP equity. And at Holy Cross, I was part of working for Worcester.
Thank you. And last but not least, Michael.
Sure, thanks. So I was class of 2011. I was an econ major. Right now, I work at MetLife Investment Management in their research and strategy group. And something I was involved in at Holy Cross, I'll give a shout out to Professor Kathy Keel for the person who kind of got me into what I do for work now, more or less. Happy to talk more about that.
Awesome. Thanks so much. So our first question that we're going to start off with is for all of these students who are looking for internships and entry-level roles. What are some of the best places to begin a career in real estate? What are some common positions that are great for those entering into the industry? Maybe what was your first entry-level role, so that students know how they can start their search, and anybody can chime in here.
Yeah, I'm happy to chime in. I think from my perspective, I started working in real estate right out of college in 2016 at M&T Bank. So I was in New York City. It's a regional bank headquartered in Buffalo, New York. That said, M&T has and did have when I was working there a pretty substantial presence in New York City doing construction lending, lending on transitional assets if there were big renovations involved in specific properties. So I think that working at a place like a bank or potentially, more on sort of the investment banking side, so at a brokerage like a Cushman and Wakefield or CBRE, where you're able to sort of underwrite a lot of deals, see a lot of deal flow, work with a lot of different people, and just be able to sort of completely immerse yourself in the deal process and the underwriting process from the start is a really good way to get started in the industry if you want to be on the investment side, and definitely opens a lot of doors to, the quote unquote buy side of the business as well.
That's really helpful. Thanks for sharing. Anyone else want to talk about entry-level roles that students could keep an eye out for?
I can just chime in, kind of speaking more about the brokerage side of the business. So I started out also as an analyst, but my original title was a sales analyst. And I was just kind of the junior person on the brokerage team here in Boston. And we, in our office, we work in a kind of unique model where we have a lot of kind of consulting services that we offer our clients. And because of that, we have a lot of different types of analyst positions that we offer. And each of them are super unique, but I think all of them allow you to see, similar to what Rob was talking about, you're kind of able to see how a deal functions and how a deal flows. And as you kind of are able to get your reps in that way, it's easier to kind of pivot from there onto a different brokerage team, a capital markets team, et cetera.
Thank you.
Yeah, I think in my experience of watching people kind of, I think in line with what was just mentioned, picking a large organization has a lot of benefits because you have the chance to see a lot of different things, and that could be on the brokerage side, it could be on the investment side, it could be on the lending side. I worked at a bank initially out of college, and it gives you a chance. I certainly didn't know exactly what I wanted to do, but being in that type of an environment gives you an exposure to the entire industry. And within the industry, different verticals, whether it's on the brokerage side or the banking side or the investment side. So I think that type of perspective is a really good one to get to figure out what you want to do, because it's certainly hard to get it right exactly out of the gate. So being in a place where you have a little bit of flexibility, I think, is really helpful.
I'll kind of add to that. I think, if I could go back and do it again, I kind of agree with Rob and Tim. The lending side of the business offers a really broad perspective, a lot of deal flow. And, one potential thing that I would have thought about is I think some of the LPs like pension funds have a really interesting perspective, because they see a lot of different strategies. They're constantly being pitched new ideas, new mandates. And that's something I didn't really know about when I was in undergrad. And I think those jobs maybe are not top of mind, and the teams tend to be smaller, but that's something that I think I would have looked into a little bit, just because it offers that broad perspective.
That's great advice.
And I guess I can chime in since I don't want to be the only one. Speaking as a lender, I will say, and I started out as a lender, I started as an analyst in my group. It is a great place to learn. You get, as a lender, and doing project level finance, sometimes portfolios, you get a really good 30,000 foot view of the real estate industry. And working at a big bank like Wells Fargo, you also get to work with a wide variety of clients, everything from the big private equities like Blackstone, Brookfield, to the smaller, more local, maybe generationally owned companies. So you see how each one operates differently, what their pain points are, and then you develop relationships with them to really understand their business. And then I think as you progress through, you get to hone in on what it is that you like, that you don't like, and you can kind of veer off from there.
That's great
Awesome.
advice.
Thank you. So the next question will be, what is a typical day like for you? And we'll start with you, Grace, if that works.
Sure. So I generally get into the office around 7:45, 8 in the morning, and I'm in 5 days a week. I think generally, I think commercial real estate, you'll hear most people are in the office most days a week, and certainly office brokers, since we're trying to lease this stuff, we got to believe in it and be here in the office. I am doing a handful of different things throughout the day. A portion of my day will be spent showing space. Another segment of the day will be kind of more centered around refining the data that we have surrounding the market. So, you know, what tenants are in the market, what they're looking for, trying to update stats for our landlord clients. And then another huge portion of my day is focused on tenant rep work. So that's running surveys where you're kind of doing a big scan of the market for whatever requirement that you're solving for. You're presenting that to your client, and then you're going out and touring the space. So I luckily get to kind of shift between a couple of different lenses throughout the day, whether I'm working for a tenant, a landlord, or I'm doing more corporate portfolio work. But every day's different. Every day has different challenges, which is really exciting.
Awesome. Thank you, Grace. Would anyone else like to chime in?
I'll offer some thoughts, and I'll apologize if you guys can hear in the background. I have a 2-month-old, and he's getting ready for his nap. So, but so a typical day for me. So my role is research and strategy, and the best way I can describe what I do is kind of like steering the cruise ship, so to speak. So my team is thinking about what property types we should be invested in, what cities we should be invested in, how the macro picture could impact how we underwrite transactions. So a lot of the start of my day is going through major things that are happening in the economy and thinking about, should that change the guidance that we're giving to the people who are looking for deals out in our regional offices, and what we're communicating to our portfolio managers. After that, we'll usually have anywhere from, on a given day, maybe 1 to 3 deals in the pipeline. And my team is on investment committee, so I'll review those and think about what things I want to bring up to our committee. I might then prepare for some sort of speaking engagement or client meeting. If it's a client meeting, I'll spend time reviewing their portfolio and thinking about the things that they're going to be concerned with and the things that I should be, talking about in terms of new transaction activity. And then I might end the day thinking about some sort of big data project or new data sources that we can use to, underwrite deals more effectively. So, but yeah, kind of like I'm sure most of the group will tell you, every day is a little different. And especially in the last 2 years, curveballs sort of around every corner. So, kind of keeps it interesting.
Thank you, Michael. Would anyone else like to join?
Yeah, sure. So I can talk about, lending, at least with Wells Fargo, and in my role as vice president. I have my own basically book of clients that I oversee and I manage. And the way we're set up is what, we call a cradle to grave type approach, in that we source and close deals, financings for our clients, and then we hold the financing on our balance sheet, as opposed to the alternative is, securitization, CMBS. So we're actually holding the loans on our balance sheet, and then we portfolio manage throughout the life of the loan until it either matures or we're refinanced. So in any given day, you can have any number of responsibilities across, whether you're underwriting, credit committee, presenting new deals, negotiating term sheets with clients, to, ongoing portfolio management. I know right now office is a huge focal point in the commercial real estate world right now. And so we have constant ongoing internal meetings about the state of, office assets that we finance, what's going on, what's the latest trends. So, you're wearing, I don't know how many different hats on any given day, just constantly kind of switching gears. So it helps make the day fly by. Sometimes there's late days, sometimes there's, not too bad days. But yeah, it can, the general theme what you're gonna get is it can vary across the board.
Awesome. Thank you, Matt. Would anyone else like to share?
Yeah, I can sort of try and talk about it a typical day, although it's a little bit difficult because you're always sort of dealing with a handful of things and pulled in all directions, as I'm sure everyone on the call is has has been involved with in their roles as well. But for me, I mean, I'm on the investment side of the business as well as the asset management side. So we're pretty flat team at Taconic. I'd say that we're all helping out and aiding in all aspects of the investment process, and then asset managing deals that we own or have debt on thereafter. So I'd say, for me, a large part of my role is screening new deals, whether a broker calls or, a partner of ours or a potential partner, or a borrower if they're looking for, a loan on their asset. So it's a lot of sort of calls with those people and understanding the deal that we're being shown. And then from there, sort of underwriting the deal if it's interesting, doing more diligence, becoming more familiar with the asset. And then, from there, it's everything from that to the closing process, dealing with legal and our counterparts and our partners and our borrowers. And then, after closing the deal, just being involved in the asset management side. So being on the call, being on the phone with leasing brokers and property managers and sort of making sure everything at the asset is running smoothly, implementing capital improvement plans if need be. So it's sort of, you're always dealing with different deals that are in various stages of their life cycle, whether that's sort of the initial screening of the deal to see if it's, sort of worthy of a potential investment, to closing the deal, to managing the deal after it's closed.
Thank you, Rob. And then for the next question, a lot of you referred to it in your day-to-day, but what are some of the current issues and trends that you've seen in the commercial real estate field, and how has it impacted your work?
I'm happy to jump in a little bit. The main thing in real estate over the past 12, 18 months has been higher inflation and higher interest rates. And interest rates matter in real estate because you collect cash flow off of a property, and that creates your income stream. And if you want to buy an asset, a lot of people do it with leverage. They borrow a loan, and that costs them money. So their income is the cash flow off the property, and they have expenses, and then they have their interest expense of having their loan. So when interest rates go up, it becomes harder to borrow against those assets, or more expensive to borrow against those assets. And so the kind of the net cash flow you make, your rent and everything else minus your expenses minus your debt service shrinks, and as a result, people are not able to pay the same price they were previously able to pay for a real estate asset. So that's been kind of a headwind over the past 12 to 18 months, and has created a good amount of volatility in the real estate markets. And it's not just real estate; it's pretty much every asset class across the board has experienced the same thing. That's starting to settle down now as the interest rate outlook has kind of stabilized, and people have, at least we all think we have, a better sense of where interest rates are going, and allow people to kind of reprice and reassess what they are willing to pay for a piece of real estate. So that's been kind of a big transition over the past couple of year and a half. On the other side, inflation can be good for a lot of styles of real estate, because your cash flow can go up quite a bit if you own the type of real estate that captures inflationary growth. So if you think about things like apartment buildings where you have to sign a new lease every year, if you're a tenant, every time that lease comes due, your landlord can increase the rent and capture the growth that's happened in the market. So that's a pretty good asset to own in an inflationary environment. Whereas if you own something that's maybe like, a building, an office building that has a long-term lease in place, like a 10-year lease in place, that lease, is in place for 10 years. And as the landlord, you can't really change it. You cannot change it. And you just get maybe, somewhere between 0 and 1 or 2 or 3% rent growth per year, where you're not able to mark that lease to market real time. And so the cash flow of your property doesn't go up as much. And as a result, you're sort of not capturing that growth that's happening in the market. And so that's a kind of a more difficult asset to own. So that's been kind of the dynamic. And then, office has become a very center of attention asset class for a number of different reasons. One of which is with higher interest rates, those assets are a little harder to own. Another is that office buildings historically over the past 5 to 10 years have just not really generated a lot of cash flow because it's been very expensive to operate them. You get income from your tenants, but then every time a tenant leaves, you have to do a lot of work to fix the building to get it ready for the next tenant. And that's very expensive for a landlord. So they've kind of been difficult investments for a while. And then of course, when COVID hit and people all started working from home, although there was a joke earlier about the fact that in commercial real estate, we're all back in the office and have been for a long time. Not everybody's back. And there's been less overall demand for office spaces. More people have worked from home, and that's been a bit of a headwind. So office is definitely the sector that most people are focused on in terms of a near to medium term risk. And that's kind of playing out real time right now, which is a pretty interesting phenomenon.
Awesome. Thank you, Tim, for all of those insights. Would anyone else like to give their opinion?
I'll throw one out there, although I think, Tim, those are probably number 1 and 2 for me as well. But another one, and I'm curious what the other folks on the line think of this, but one thing that we've been thinking about more is risk from basically what's broadly captured by the term ESG, or environmental and social governance. The risks that we're seeing are in 2 categories. One is physical risk. And by that, I mean the risk of properties being physically damaged by climate change, like wind damage, hurricanes, flooding. We had a property this year that was completely destroyed by the hurricane that occurred in Florida, a few months back. And it seems like insurance costs are becoming more difficult to underwrite for us. And that it's starting to materially impact our investments and our returns. So it's really hard to predict. It's hard to forecast because, whatever your opinions are on climate change, no one can really tell you what the future looks like. So how do you price that in? So that's the physical risk side. And then the thing that we can price in is what I would call transition risk. And that's state, local, federal government making laws that stipulate your building has to be environmentally friendly. And an example of that is there's a law in New York, I think it's called Local Law 97, and it's essentially a tax on older buildings. So if your building doesn't meet certain environmental regulations, now your income is going to be impacted by that in the next coming years. So this is kind of like a new wrinkle in how we underwrite transactions. And it's not like, something that so significantly moves the needle, but it's feeling like it's becoming more and more important, and it's at least something that we should pay attention to. So that's something that we're thinking more about these days. It's just kind of hard to wrap your head around.
I'll just chime in on that note as well. So in Boston, there's a similar ordinance. They're calling it BERDO, BERDO, and it's basically a standard set by the city that is, the goal is to have the city be net zero by 2050. We're not really seeing the effects of it now, but we're anticipating, 2027, 2029. That's when the older kind of second generation office towers are going to start being hit with those taxes for not being in line with these new environmental standards. And we're anticipating that those costs are going to be passed through to tenants. So as we're looking with tenants today who are looking to sign, 10, 15-year deals down the road, we're starting to ask the questions to landlords, how are these costs going to be impacting our client down the road? And then the other side of the ESG that we're seeing is especially from large corporate users. So I think, McKinsey & Company just signed a new lease in Boston. Cambridge Associates signed a large lease earlier last year in Boston, and even some bank and financial services firms that we're working with currently, they're now asking us the questions when we're, sending out proposals to landlords, that we're asking landlords to essentially quantify what it is that their projects or their buildings are doing for ESG. A lot of the new construction buildings in Boston are kind of designed with ESG at their core, but these second generation towers, it's still important that they're making an effort to reach these standards as well. And so the question of how do you quantify that is coming up a lot, which has been really interesting.
Absolutely. Thank you, Grace and Michael, for highlighting the importance ESG and those investments have been within the commercial real estate realm. Does anyone else have anything else they'd like to offer? You can go to the next question. And then also just like to add, students, if you have any questions as we're going through, just put them in the chat, and then we'll definitely get to those.
Great. Thanks, Julie. And thank you all for that advice. It's really interesting to think about both the past trends and also the future trends and how they're impacting your day-to-day work and the industry as a whole. Shifting gears to talk a little bit more about some of your career advice and students trying to get their foot in the door. Can you please share what has helped you get to where you are in real estate, and what advice would you have for others who want to set off in a similar direction? So again, what has helped you get to where you are, and what advice do you have for others who want to set off in a similar direction?
Yeah, I suppose I'll kick it off. I mean, at least when I was at Holy Cross, there wasn't a group or anything like this that focused on real estate. So, I mean, the onus was really on you as an individual to try to reach out to people if you had an interest in real estate, to figure out who you can connect with. So I think just sitting on this, screen today, you're already well ahead of where I was at this point. And so, I mean, on that same vein, utilizing the Holy Cross network, I think, is extremely important, probably where it got me today. Reaching out, trying to figure out as much as I could about the industry. Obviously there's, at the time there were no classes that focused on real estate. So, honestly, just utilizing the network and, as much as you can, and just, kind of getting out there and getting in front of people.
That's great advice. I hope students all heard that. Anyone else have advice or anything specific that helped you get to where you are now?
I mean, I agree with Matt. I think just, alumni are super receptive to helping out students. I would say, I tried to do as much of that as I could. But like Matt mentioned, like, we didn't have the same resources. Even I feel like in 2011, when I graduated, I don't even know if LinkedIn was as much of a thing, and it's much easier to kind of find people in your network. And, there's also good resources online now in terms of learning some more specific things about, if it's the investments process or whatever that you can kind of get into. And I'm happy to share some of those resources if anyone, feel free to reach out to me after the call. But yeah, I think just reaching out to people in the network is great.
Awesome.
Yeah, I would agree with all that. I think I definitely fall into the camp of wasn't as far ahead of the curve as you all are, but working to, don't feel like there's an expectation that you have to get, a job offer or anything else like that from an alumni when you call them or reach out or whatever. Just a conversation it's a big industry. There's a lot of different angles that you can approach it from. There's a lot of different job opportunities. There's a lot of different names and acronyms to learn. And so just the more you talk to people, the more you'll understand how the pieces fit together. So definitely use those resources, and think about opportunities like internships, whether they're over the summer or even during the school year, and just ways that you can build up your resume with an interest in real estate. I think from my perspective, when we have people come in as first year analysts, we don't really have much of an expectation that they know a heck of a lot about real estate, but we do have an expectation that they are interested in it. We want to see that people have done the work to figure out that it's an industry that they have an interest in, and that they're looking for a long-term career in it, that they're not just kind of starting out in a job and going to see how it goes. They want to see that you've done the work to really understand whether or not it's a fit for you personally. So I think that's an important thing to do, both before you apply to any jobs, but also even before you talk to other alumni. Just do your best to read the newspaper, educate yourself a little bit, just kind of do some research on who the different players are, what the different asset classes are, and what kind of makes each of them tick. I think is pretty helpful.
Yeah, and I'll just add on to that by saying, don't be too quick to just like close an opportunity off. Like Tim just kind of mentioned, there's so many different ways to get into this industry, and there's so many different facets to it that I don't think there's just one clear path. Like you have to get a banking job or you have to get a broker job. I work with people, in finance that we come from all sorts of different backgrounds. We have history, English majors. We have people who started at, being the boots on a construction company. So, we're giving you a good framework, but also just be, open to, whatever's out there. And again, cities too, right? When I started in New York City. I grew up in Massachusetts though. But New York City was a great opportunity. I also moved to San Francisco for a certain, period of time, for work. So I would just also say, be open to the opportunities that are out there.
Yeah, I would actually add on to that, Matt. After Holy Cross, I went to grad school, and in between years of grad school, I was looking for an internship. And at first I was like, I only want to work in New York City for the internship. But then I was like, there's a lot of cool cities out there. I could kind of broaden my horizons. And I was surprised at how sort of disaggregated real estate was outside of New York. So I ended up moving to Denver for the summer. I worked for a real estate investment trust that was based there. And I had a great time, and it was a really different experience. And I think a lot of people are kind of focused on the coastal cities, and to the extent that you're open to living somewhere else, there's a lot of interesting opportunities all across the country. And it's something I would definitely encourage people to be open to.
Yeah, I'd also echo that. I don't think it's ever too early or too late to sort of start building your network. If you do choose to work in the real estate industry upon graduation, you'll quickly realize that it's a much smaller industry than it seems. And a lot of those people that you sort of reached out to initially will inevitably pop up again during your career, and I'm sure you'll meet some of those people as you start working in the industry. So don't be afraid to reach out to people more than once to start sort of fostering relationships whenever you can. And I think that reaching out to someone and forming a relationship with a couple people, and reaching out to them, once or twice a year, and continuing that relationship is always a good thing. And you're going to find that those relationships, will continue throughout your career, and you'll be able to sort of reach out to that person if you have a question, or if you're looking for a job. It's always good to have those people that you sort of that you started talking to early on in your corner.
And I would agree with what everyone's said so far. And I think, just to reiterate, I think the one thing that continues to blow me away as I have been working in the industry for going on 2 years now is just how many Holy Cross alumni there are, and how frequently I bump into them, no matter, whether it's down the street, doing showings, or it's, on landlord calls, or working on different types of accounts. The Holy Cross Alumni Network in real estate is very strong, and I would agree. So many alumni are so willing to jump on the phone with you and just kind of, talk to you about day to day in the industry. So just don't be afraid to start fostering those relationships. And then also, going back to the point about internships, I think they're great. I had several in college, and a lot of the work I did as an intern, I was like, it showed me more so what I didn't want to do versus like what I did want to focus on when I got out of school. I think those are really helpful experiences, just to kind of start to steer you in a direction. But I also would agree with kind of being a sponge, and I had no idea what I was getting into when I applied for the original job that I got at CV, and I was kind of just trying to get my foot in the door, and landed on a team that I didn't ever think I'd be on. I never thought I would want to be an office broker, and here I am. So
That's great advice. And students, I feel like a lot of us are nervous to network, but all of these alumni are telling you that networking is important, and that it's okay to not know everything that you want to do, but to reach out. So people can't help you unless you ask for help. It looks like we have a question in the chat from Sam, who's asking, how have you used your liberal arts education to be successful in commercial real estate?
I'll chime in on this, since I already plugged Kathy Keel. But there's, in real estate world, I would say, there's two things that I found really important. One is just the communications aspect. Especially in my job, I do a lot of writing, I do a lot of presenting, and so I feel like we got a lot of practice doing that at Holy Cross. And then also, Keel taught econometrics, and a lot of my day-to-day job is doing the types of analysis that we learned in her class. So when I'm thinking about how we should underwrite office rent growth or multifamily rent growth, I might think about what type of data, what type of analysis do I need to do to produce that forecast. And there were specific things that Keel taught in that econometrics class that I do in my day-to-day job now. So that's kind of one soft skills example and one kind of more specific example. But yeah, happy to talk more about that if there's any questions.
Yeah, no, I can't say I use a whole lot of my Mandarin that I learned at Holy Cross, but I will say, to Mike's point, writing, I think, is one of the most utilized skills. I think, at least in banking, the amount of memos, reports, and write-ups that we have to do, even emails, drafting an email. It's amazing, actually, the number of people you run into, or you get emails from, or you're looking at drafts where you're just marking it up like crazy. And so I think the writing skills and also presenting have really taken me actually further than I expected. You say you're going to work at a job in finance, you don't realize how useful those skills are.
Absolutely.
And I would agree on the writing front as well. I also think, though, one of the benefits, and you hear it all the time at Holy Cross, of the liberal arts education is that you are exposed to so many different types of disciplines. You're taking so many different types of classes. And I think it trains you to be really good at number one, being able to learn a lot of different types of things in different types of ways, but also kind of be able to wear a bunch of hats at the same time. And that's so much of what you're doing day to day in real estate. And so I think those kind of skills, just the ability to think, the ability to write, and the ability to communicate really well, will carry you very far.
Jimmy, you have a question?
Yeah, hi guys, I'm Jimmy. Thank you for talking with us tonight. I have a counterpoint to Samantha's question, which is, what is one skill or trait that maybe Holy Cross didn't prepare you for the commercial real estate world? And whether that's taking an Excel class or an accounting class, or just something that maybe you didn't feel as prepared for that you suggest we might look into or do.
I mean, I guess I'll say I have a real estate club, but they fixed that.
Yeah, you do find that there will be other schools that will more specifically prepare their students definitely for finance and in a decent amount of cases for real estate in particular. So I remember my first year analyst class, had kids from Penn and like Wharton, and then Cornell has a hotel school, a hospitality school, and Wisconsin has a real estate school or real estate program within their business school. And you'll come across kids who have years of experience, just like anything else. When you actually start your job, that gap closes in like a couple of weeks, and it's not something that is like a long-term detriment, but there will be people who have more specific experience. So if you're able to spend some time, I mean, we might all be using artificial intelligence by the time you guys have jobs, but like for now, like Excel is a good tool to get familiar with and start to learn. I mean, shockingly, it's been the program that we've used for my entire career now. So something's probably going to change reasonably soon, but it's still the basics of finance. And I think really like just the very fundamentals of real estate investing. It's not a very complicated business. There's a lot of things that feel complicated and it's not easy to do, but the fundamentals of understanding like why somebody invests in real estate, who the different constituents are, the tenant, the landlord, who does what thing, how it's structured, why you would want to own one type of building versus another type, what the risks and profiles are. Those are just things that others might have been challenged a little bit more about in their at their schools. That I think you can definitely pick up a lot of that yourself relatively quickly. I do think going in, you should know that day one on the job, you're likely to come across people with a good deal more finance and real estate background than you have, but the gap will close reasonably quickly if you work hard at it.
Thank you, Tim. And then we got another question in the chat, which was from John. What opportunities do you see in the market today apart from an ESG perspective?
I'll comment on that. One thing, we're thinking about a little bit more is how supply chains were disrupted during COVID. There was a lot of reliance on China for trade with the United States for things like everything from semiconductors to machine parts. And there are a number of cities in the US that I think have been sort of overlooked over the last maybe 10 or 20 years. You could think of what might be described as Rust Belt cities that have manufacturing infrastructure that I think could benefit from that. And I think also for similar reasons, Mexico. So there's a lot of cities in Mexico that have good logistics access to the US. And typically, we'll do investments in Mexico, and we'll receive our rent payments in dollars or our mortgage payments in dollars, and the tenants are Amazon. So it's the same credit as tenants in the United States, but just because it's across the border, we usually get a little bit higher yield on those investments. So And I think there's some, like I said, economic tailwinds there as well. So I think the disruption in supply chains is something that could bring some opportunities to areas that have been overlooked in the past.
Thank you, Michael.
And I'll just chime in, kind of speaking more from the office side of things. It's obviously a really interesting time right now. There are certainly a lot less tenants in the market out looking for space. And there's just tenants need less space due to hybrid work. But one of the questions that we're getting asked a lot by our clients is, how do I navigate hybrid work, and how do I, it's hard for companies to build culture with everyone working from home. How do I, get my employees to want to come into the office and to want to build culture? So as brokers, we're kind of getting asked these kind of more workplace strategy questions, which is really interesting. And it's been interesting to kind of where we have a team in our office dedicated to workplace strategy. So it's been really interesting to just see how companies are starting to grapple with these questions, and just how that's changing tenant demand in the market and the types of space that they're looking for.
Thank you, Grace. And then it looks like we have another question. What resources would you recommend a student read or watch to build a better understanding of the real estate market and real estate in general? Also, what qualities and traits do you look for in a candidate that can't be observed fully through the resume?
Yeah, sure. I'll start by just saying, I don't know if any of you read the Wall Street Journal, but they do have a real estate section on their website. Always one of my first go-to places when I'm looking for any news on the day. And then, sorry, what was the second part of that question? I already forgot.
It was, what qualities and traits do you look for in a candidate that can't be observed fully through the resume?
Yeah, honestly, just their ability to communicate. Right, you only get so much space and so many lines on, a single piece of paper to describe yourself, what you've done. So your ability to articulate what it is that you've done, how it makes you a good candidate, how it's applicable to the real estate world or the position or the role, and just honestly being able to communicate your ideas, clearly. It is surprising how, I'm sometimes sure it's nerves that settle in during an interview, but a lot of people write their resume and kind of forget what they put down. So it's always good to just go through your resume and be able to, step by step, be able to explain every single line on there. Because just like as a general rule, if it's on that piece of paper, we're going to ask about it. And so I would expect, no matter what you put in there, expect to be asked on it.
Thank you for that advice, Matt. Would anyone else like to chime in?
I think one of the best free resources out there is REIT earnings calls and REIT investor presentations. They have to disclose a shocking amount of information. They'll talk about their investment strategy. They'll talk about pricing that they paid on deals in the last quarter and how much they bought and at what cap rate, and what they expect to do in the next year. And I think listening to those calls or reading those reports that are usually very, high level, easy to read for the most part, kind of will make you conversant in things that people are talking about in real estate world today. So I would say, find 3 or 4 REITs that have a business that you're interested in. It could be hospitality or maybe logistics or the office sector. Find a couple companies and just flip through some of their presentations, and I think you'll be surprised at how much, for free you'll be able to get out of that.
And on a similar note, I would also say a lot of the large commercial real estate services firms like CBRE, JLL, Newmark, Cushman & Wakefield, they have pretty large research departments, and they, on a daily and weekly basis, post on their websites published research. And it can talk about trends that they're seeing in specific asset types, predictions that they're making. They usually every quarter they'll also give their earnings and their stats for the previous quarter. And those are all just readily available on the website. And some of them are 2-minute read. So I think that's always a really great resource to just see what they're talking about. And then the other thing I would say is, and I read it every day, is whatever city you're in. So I read the Boston Business Journal every day. They have a commercial real estate section, but it's just kind of good news about deals that are happening in the market, things like that. And there's a couple other similar publications like BizNow and Globe Street that are also good to look out for.
Awesome. That's all really great advice. Rob, I see you just came off of mute. Were you about to chime in?
Yeah, I was just gonna say, I mean, there are a ton of different websites you can go to, and I think that the earnings call transcripts are a really great way as well. I think that's a great idea. But if you don't want to sort of, or I think those are definitely great ideas. But I also think just even reading like a novel or an autobiography from some real estate developer or someone involved in the industry could be a really interesting way to just get a high level feel for how people deal with the business on a day-to-day basis, and a lot of times that's just a little bit more interesting than just reading a news article or a transcript. So I think mixing both of those could be a good idea. And I think like a novel or a biography could also sort of spark that interest in real estate in you if you didn't already have it, or maybe just grow that interest in real estate and get you excited to work in the industry and to talk to more people.
Definitely. That sounds like a great way for students to, one, gain knowledge and prepare for interviews, but also just see if they have a passion for it, if they want to pursue the career. So awesome advice. We do have just a few more minutes, so I'll just do a last call for questions. Either you can pop off of mute or put one in the chat. If not, I'll give it 30 seconds in case anyone is typing. If there are no more questions, I would like to take a minute to thank all of our alumni and Julie for participating in this panel, and for all of you students for taking time to be with us. Again, you can follow up with the alumni, with me, to make plans for your internship and full-time job search. And please, please take the advice that these alumni have given you. It's really, really helpful, and hopefully we'll keep you moving forward in the job search process, and we'll help you, kind of find things to get passionate about and ask questions about. Without further ado, we'll say thank you and have a good night, everyone.
Thank you. I would also just like to quickly add thank you, Becky, for coordinating this event, and then also to all the alumni that came on this panel. We really appreciate all of the guidance, advice, and different support and insights that you have offered, and we all look forward to connecting in the future. So thank you again, and have a great rest of your night.
Great. Bye, everyone.
Thanks for
Thanks all.
Thank you.